All right, guys, welcome. In today's presentation, I want to talk about making a full-time income trading options in 2022. All right, this is something that a lot of people want to do. They want to quit their 9 to 5s. I'm going to show you all the secrets today. I want to discuss specifically what you can do, the strategies that you can take. I have a bunch of different information. For example, when I worked at Goldman Sachs, I'm going to share with you different asset allocation models, where you should be putting your money, what strategies, and a lot more. Okay. So super excited. Review of 2021 had a 60% annualized return, or the annual return for 2021 was about 60%. Now, when I do go into the next slide, you're going to see about 42%. The reason for that is because I added $600,000 into my portfolio. So Robinhood doesn't account for that. No, Robinhood isn't going to account for the capital that I added in. So when I go to my next picture right here, you'll see I made about $540,000 in the past year. This was taken, as you guys can see on the bottom right here, on the last day of the year, 12/31/2021. So obviously I'm making a full-time income trading options. I love showing my receipts. I love showing you guys the actual returns. I know this is really important. So many people out there are saying they're making money. Not enough people, or basically almost no one, will actually show you the real results. So it says 42% in the past year, but it's closer to 60%. So when I was working at Goldman Sachs, we did something. I was an FA. I was an intern for 6 months, but I sat next to all the financial advisors who are just salespeople. They're just cold calling, and our clients were some of the biggest in the world. I was in Los Angeles, right next to Hollywood, so had a lot of access to movie stars. I'm not allowed to mention names because I signed, NDAs and stuff like that. But I was looking at their portfolios. I analyzed them. I saw what they were. So I'm going to share a lot of stuff that I learned. I mean, a lot of it is not rocket science. It does become a little bit more complex because big portfolios and Goldman Sachs financial advisors, they don't have the time, they don't have the personal touch to actually work with the client because they have other clients. They have a lot of people they're working with, so they don't actually do options. So something I'm hoping to really add value to and show you guys basically how to make a full-time income in 2022 is just by showing you, what I learned from Goldman and also what I learned from my other internships. So anyways, you guys can see here about 60% returns a year, and that's pretty much what I average. If you have a smaller portfolio, you can actually average more. I'm going to show you guys how to do that later on, because if you have a smaller portfolio, you have more time. It's also easier to scale a small portfolio. My bigger portfolio, it's not easy for me to 2x, 3x, or 10x like I used to be able to, just because some of the strategies that will allow you to 5x or 10x are a bit more risky. They're a bit more risky. They take more time. And at this time, because I love teaching, I don't have as much time or energy to open up so many positions, but I'm still going to teach you guys because student outcome is pretty much the most important thing for me. I love trading for myself, but I also love to see students pretty much make that bread and butter. I want to see people making money, because whenever I get the testimonials, I'm going to be sharing some testimonials with you guys when my team shares some of the links for you. When I see testimonials, it just makes me feel really good. It's something that I'm proud of, something that I'm excited about. So yeah, as you guys can see, lots of wins here. This was taken the last day of the year. So as you can see, I'm consistently winning, and we'll talk more about that as I go on. So let's get into the next slide. We went over my review of 2021, and basically I want to talk about how to manage to get similar results and how to do it fast. And the thing is, I also have an interesting story. I used to work for Goldman Sachs and other hedge funds, and I had many internships in the finance space. Now, what I've noticed is a lot of people are like poor people. They go to school, or they might work on the side, or they might, flip some properties. They don't really they have a job, but they're not looking for more like sources of income. They have just one salary and they're dependent on that. But what I realized, I've been around a lot of successful people. I've seen some of the movie stars in LA. I've obviously worked in New York. I've seen a lot of really wealthy people, high net worth people worth $5 million, $10 million. What I've noticed is most of them are and people, because and people have a lot more success. They're always looking for opportunity. They're not just working a job. They might be working a job, they're also flipping property on the side, or they might be working a job but also trading on the side. I haven't really seen any forex traders, but I've seen stock traders, and I've certainly seen option traders. So I just want to encourage you to be an and person. That's why I brought that up. That's just what I've seen to be really successful. I've always been a firm believer in that, even when so I had so much experience in finance and banking and trading. At a certain point, it actually got boring to me, and I wasn't learning anymore. So I became a consultant for IBM. And when I was a consultant, I was an and person. I started a YouTube channel because I had a passion for option trading, and I had so much good results, and I wanted to share that basically with the world. So yeah. Anyways, something that I do want to do is do a quick portfolio walkthrough. I'm going to do a lot more of that, but I just want to walk through my portfolio a bit live. And I want to talk about mixing multiple strategies, because if you want to make option trading your full-time income, you can't just look at it from one angle, right? You can't just just buy call options or just sell put options. So I'm going to show you a bit of the portfolio. We're going to do a quick walkthrough, and then I'm going to continue on and tell you how you can basically do it yourself. So here's a portfolio, past 3 months, 400K. Seems pretty crazy to me because obviously that's more money than I can probably spend. That's more than a full-time income for most people in 3 months. Now, I'm running different strategies, and it depends on the size portfolio that you have. Again, I'm going to cover that at the end of this presentation. So something that I recently opened is a firm. And as I'll discuss, the reason why I opened this position is because it has high implied volatility. So what you guys want to do to make a full-time income in 2022 is you want to look for high implied volatility options, okay? Actually, I have a question for you guys. What do you think is going to have more premium, right, on a percentage basis? Coca-Cola, Warren Buffett's favorite stock, or Tesla? Can I get some stuff in the chat? What do you think has more volatility? What's more sexy? What's going to make you more money? Is it going to be Coke or is it going to be Tesla? All right, lots of Tesla here. That's good. All right, you guys are already going to get stupid rich. All right, that's good. I don't see any Coca-Colas. Everyone that's putting Tesla, you're going to get stupid rich. That's good. Exactly. You guys are on the right track. That's because options really benefit. So a lot of people are afraid of volatility. Volatility is bad. No, in fact, volatility is fantastic. Volatility is really good for option traders. So again, I'm going to discuss different strategies that you can use and how you're going to basically spread your money around. But volatility is a good thing. So with the firm here up $168, I know I opened this up, I think Monday or Wednesday. So either yesterday or 3 days ago. I do a lot of trades. I have a couple accounts. But this is quick money right here. Let's see, American Airlines, Airbnb, Coins and Iron Condor. So we're going to talk about Iron Condors as well today. This is up 42%, $235. Now, an Iron Condor is really cool. It goes back to volatility because you can make money no matter what happens with an Iron Condor, as long as the stock doesn't crazy go up or crazy go down. For example, actually, this is the next thing in my screen is net. So I'm going to show you a net example, but real quick, Coinbase is probably around $250. So this coin Iron Condor is going to be successful as long as Coinbase stays within that range of 215 to 300. And we're going to go over technical analysis today as well. But an Iron Condor really benefits when, there's a lot of implied volatility, but the stock doesn't end up crashing or going up. I'm going to show you what that looks like later on when I open some charts. Nvidia, we're also going to look at Nvidia later on in the presentation. Now, sometimes I may have some losses. It might look like a loss, but it's not really a loss, because one of the best strategies that I have, especially for people with a little bit more capital, but you don't need a lot of capital because, for example, this is a $1,750 position. I mean, it only costs $1,750 to open up a Palantir put. Now, I am down. However, I'm excited, guys. I'm excited. Does anyone know why? Does anyone sell puts, by the way? Does anyone sell puts? Because if you already sell puts, that's fantastic. That's one of the best things that you can do to make a full-time income. It's as simple as that. That's one of the most simple strategies. I'm going to take a look at the chat right now. Yes, sir. Perfect. I actually see some people I recognize. Perfect. So selling puts is fantastic because you get paid to wait. You literally collect premium. And I'm excited about Palantir because although it says I'm down, the worst thing that can happen is I have to purchase shares of Palantir. But if I want the stock anyways, if I like it at 17.5, that's a good thing. So I'm really excited about Palantir. Now, I also do, opportunistically trade, call credit spreads. We'll talk about that later as well. Rivian, Tesla. This is a 12K profit on Tesla. HIMS, 1,500 on HIMS here. Net, we're going to show examples on Net. Snow, almost $1,000 on Snow. Then again, same thing with Tesla. I'm down $29,880. However, I'm excited to own more Tesla. As you guys know, I ended up selling Tesla partly by accident because I was selling covered calls, but also I was happy to sell at 1,100. And now I'm trying to buy it back for 1,000. So made really good money there. And yeah, just still selling puts. Still one of the best strategies. Anyways, I don't want to spend too much time on my portfolio. Let's continue on with the presentation and discuss what type of mixing strategy that you want to use, right? There's a whole lot of them, so let's keep going here. But before I guess we go into some of the strategies that I'm using, I just want to quickly discuss Tesla covered calls because it's an anomaly, and an anomaly is just something that isn't really supposed to happen, but it's happening anyways, right? So one of the anomalies in the market is momentum, but another anomaly is selling covered calls on high implied volatility stocks. So for Tesla, covered calls have done really, really well. And if you think about it, Tesla was a crazy performing stock. Selling covered calls shouldn't really work because one of the risks, I think it's actually in one of these slides here, I'll actually talk about the risks. When you sell covered calls, it's not the best for stocks that are rising a lot because you have a chance of losing your shares. If you sell 1,000 covered call, you'll lose your shares at 1,000. You can potentially incur some losses as well if you try to roll that covered call. So technically, there is some risks to covered calls, sort of, because at worst, you're just selling a stock for a price that you want to sell for. But if you don't want to lose a stock, then you have a little bit of risk. However, Tesla was one of the biggest momentum plays literally in 2021. The stock crushed. I mean, it went up like 50% or more, right? I had 1,000 shares acquired for like $480,000 from around November 20th, right? Around $480 per share. Even though Tesla rose so much, because I'm using technical analysis, this is what you guys should do to make a full-time income. This is super easy. I made $93,000 on Tesla, even though technically I should have not have made money because every time it rises, technically my covered calls will go against me and I have to roll them. But the strategy of selling covered calls and selling options is so profitable. It's so good, especially on high implied volatility stocks, that I ended up making $93,000 on a stock that went through the roof. So this is something that you guys need to implement. So I know you guys said you sell puts. You guys also sell covered calls? And also let me know if you want me to keep going. Am I giving you guys some value here on how to make a full-time income? Because I want you guys to know that it's totally possible, no matter, really what size you have a portfolio. Obviously, if you're at 5K, keep working your job, keep putting money away, but you're actually not as far as you think, even with a small portfolio. All right, keep going. All right, so I shouldn't stop. I can stop here. All right, now we'll keep going. I like to see that enthusiasm, guys. I like that energy. I love it. All right, so $93,000 based on the capital that I put in was a 19% return despite all of the momentum. So if this works on Tesla, literally, can you imagine? It's going to work on anything, on any stock, basically. Selling covered calls is usually going to work. I mean, not 100% of the time, right? Nothing's guaranteed, but over a long period of time, selling options is just the way to go. So yeah, again, 19% return. And later on in this presentation, I also want to show you guys more on Nvidia. So Nvidia has been a stock that I've been exploiting. I think you guys should exploit Nvidia as well. There's Nvidia, there's Tesla, Snow Nets. We're going to do a Nets example later on. But yeah, all of these different stocks I'm going to be showing you guys are fantastic. And honestly, one of the best things that you want to look for is high IV. High IV now depends, okay? Let me quickly open up a high IV stock. It could be, let's go Palantir, okay? Palantir is just something I'm really excited about. Had a pretty big pullback, excited to buy it, but now I'm going to open up Palantir. I'll just go to sell put, and I'll go for like January 14th. I just want to show you what a high implied volatility is. So Robinhood or any other broker, it could be TD Ameritrade, will show you implied volatility. Tier 65 is really, really good. That's high implied volatility. For example, I asked you guys about Coca-Cola, right? And all of you guys said, oh, Tesla has more money. You were all right, by the way. Tesla absolutely has more money than Coke. Coke is way more stable. And another reason that Coke is awful is look at this implied volatility. It's 16.95. What's going to have higher premiums, Coke or Palantir? You guys tell me in the chat. Hopefully, you all have the same answer, just like you had the answer before. PLTR, baby. Yes, PLTR. Exactly. PLTR all day. Exactly. So yeah, so that's pretty much the most important thing that you guys can do to make a full-time income. However, please don't go out there and look at things like NMDM or penny stocks or things under $5, because you're going to come across some issues. For example, all options have bid-ask spreads. So if the options aren't liquid, meaning you're picking some stocks that are not popular, you're going to get hurt. Even though they have a high implied volatility, they have wide bid-ask spreads. The bid-ask spread could be 50 cents. The bid could be 50, the ask could be $1.50. You can get $1, which is good money on a $5 stock, but you are losing money in that transaction. You are sacrificing. There is a cost. Even if you're using Robinhood, there's a cost to trading options, and that's the bid-ask spread. And also, it's very risky to go for stocks that are like less than 10, less than $5. You start to come with a lot of risk. So I'd be very, very cautious there. But I have seen really good stocks like HIMS, for example. Covered calls on HIMS do amazing. Again, looking at my portfolio, I'm going to go open up HIMS because this is one of the stocks, also American Airlines, SoFi. There's so many different names here that are going to be good, but I'll open up HIMS. And all right, so let's see. I want to look at my history as well. So 70 contracts for $2,500 on December 22nd. This option expires on this February 18th. So that's about 3 months, basically. So in 3 months, 2,500 divided by 3, about $800. And how much am I putting into this? I put into this 40K. But I mean, $800 can pay rent in so many places in US. I mean, not in the expensive cities, but hey, something like HIMS can make a lot of money. And also, I'm going pretty safe. I sold a 7.5 call. I could have easily sold a call that's near the money, closer to the money. So anyways, HIMS is something that I'm looking into. American Airlines, SoFi, there's so many different names. The most important thing is you pick a name that has liquidity and also has high implied volatility. All right, and we already talked about risks for covered calls. All right, you guys still with me? You guys still with me? Can we talk about put credit spreads? Because spreads, oh, I love spreads. You know, I like to spread that peanut butter on my toast every morning. You guys still with me? Ready to talk about spreads? All right, cool. Have a lot of yeses. Slow down. Okay. All right. So we'll go slowly. We'll discuss put credit spreads in detail. All right. Put credit spreads are amazing because the benefit of put credit spreads, you don't need a lot of capital. You can put some money in and get a very high return for what you put in. And many spreads that I'm opening up only requires about $500, sometimes $1,000, but also you can open up put credit spreads with $250. I mean, you can also do $100 spreads. For example, I'm going to go a little bit into spreads. I'm going to show you a spread on, let's do Palantir again. I'm going to pick on Palantir. I'm going to show you guys what a spread could look like, okay? And don't worry if you don't fully understand it. We have so much training resources for that. We're also going to have more info on it. Don't worry about that. Simple example, okay? Actually, let's go out to January 21st. This is about 2 weeks out. So selling a 16.5 put option, okay? This is establishing a put credit spread. We're selling an option that's near the money, 16.5, still out of the money. You know, currently Palantir is at 16.90, and then buying a put option. And we're going to go down 2 strikes. It just depends how much of a gap that you want. For example, I said we can do a $100 spread. You can literally have $100 in your account and make money. Here's how. I'm going to sell the 16.5 and buy the 15.5. You guys can see on my screen right now, it says put credit spread. That's because I'm opening up one put option that's closer to the money, and then I'm buying a put option that's farther out of the money, okay? This farther out of the money option that I'm buying, this 15.5, it's protecting my butt. What I mean by that, if you sell a 16.5 put option, you're required to have the collateral, which is $1,650. Now, not everyone has that. Most people do, but not everyone wants to put up that amount of capital. Some people want to leverage their portfolios. They want to make money, a lot of money, option trading without putting up a lot of capital. That's the beauty about options. They have leverage, just like real estate, okay? When you guys are buying a house, do you have to put 100% down? What do you guys think? I mean, most people are going to know the answer to this. Do you have to put 100% down on a house that you're buying? Let me see in the chat. No. 20%. Okay, 1% said 20%. Of course not. Perfect. And one person actually asked, why not 16? I'm just making an example. 16 could be fantastic as well. I'm not giving a specific trade. I'm just educating you guys here. You can also do 16 and 15. It's up to you. This is just an example. So obviously, 16 and 15 will work, and 14 and 13 will work. So I'm just doing 16 and 15 and a half. But yes, most people said 20% down. In some cases, you can take an FHA loan and also put 3.5% down on a property as well. The beauty about real estate is you don't have to put all the capital up front. You can control a $1 million house for $200,000, and you can reap the benefits of cash flow and capital appreciation. And options are the same thing, except you don't have to deal with tenants, you don't have to deal with banks, you don't have to deal with loans, you don't have to deal with any of that stuff. That's partly the reason why I don't currently own any property, is because option trading is so attractive. There's almost no point of doing other things because they're so time intensive. But when you can make fast money with a few clicks of a button, if you know what you're doing, I prefer option trading over real estate. And option trading also has leverage. So rather than having to put up $1,650, by buying this 15.5 put option, you're creating yourself some protection. Even if Palantir went down to 0, it doesn't matter because the 15.5 put fully protects you. So as you guys will notice right here, total credit 33 cents, which is really $33. When I scroll down, you'll see here $33 and your max loss is 67. This is literally a 33% return. This is a 33% return, guys. You're only putting up $100, you're collecting $33. In fact, your max loss isn't even $100. Because you're collecting $33, your max loss is only 67. So in fact, this isn't really a 33% return. In fact, it's a 50% return. 50% return by January 21st. Now, obviously, we are going to talk about risk management today. Risk management is very important. You don't want to just open up your entire portfolio in this one position. You want diversity. We're going to discuss diversity. And again, I promise you guys that something that I learned at Goldman Sachs as a financial analyst, working and looking at, most people had averages of 10 to 20 million dollars, but I've seen $1 billion portfolio as well. It was crazy. Feels the same just looking at extra zeros, just a bunch of zeros. So we're going to look at how you should balance your portfolio later on. You don't want to open up just, even if it's high return, you still want to not have all your eggs in one basket. I know you guys have heard of this before. But here's an example of a put credit spread. This is a must-have in your 2022 strategy. This is something that you must do to make a full-time income. In fact, it's one of my favorite things. So I actually have a put credit spread that I want to share with you guys. It's already pretty much expiring, but I can basically show you a new one that I'm looking to open. All right, so I'm going to show you what I've done and what also I'm looking to open. And I may have actually opened it this week. I forget if I made a put credit spread trade on Tesla, but I'm going to open up Tesla. I'm going to show you guys what the put credit spread will look like. But first, the put credit spread that I had on Tesla was basically expiring, I believe, on January 21st. Okay, we're going to look at that position right now. It made $11,600, and I only had to put up $18,400. It's a 63% return. Okay, that's how you grow a portfolio very fast. That's how you can grow a fairly small portfolio very fast. I mean, if you look at, even the greats, Warren Buffett, a lot of hedge fund guys, they're making returns that are 20, 30% a year. Options, I'm doubling them. It's not rocket science, but also so many people don't understand how to do it properly. So many people try to do it themselves, and it doesn't work because it's easy, but at the same time, it takes a lot of time. It takes dedication to understand how to properly do it. So let's open up Tesla. So you guys already know Tesla is one of my biggest positions. I've been invested here for a long time. Have 5 different strategies that I'm running on Tesla right now. Whole lot of collateral. So let's take a look at this option right here. This is a put credit spread. We're talking about put credit spreads. So let's open this up, and it does expire January 21st, 2022, this year, in just the next couple of weeks. Now, this position has made a total of $12,080. Okay, $12,080. Okay, so I want to look at my history. Well, maybe I cannot here. That's okay. So if you look right here, 500 and 490 is the gap. Okay, this is a $1,000 spread. It costs $1,000 to open up one of these positions. However, I have 30 of these contracts. Okay, so I have 30 of these positions, which means I put up $30,000. However, I collected $12,000 immediately. That's the beauty of selling options, guys. That's how you make income. When you sell options, you collect income right away. I mean, it goes into your account now. Well, maybe not today because the market is closed right now, but tomorrow, if you ended up selling a put option or a put credit spread, money goes into your account today. You literally take that money out. I mean, sip margaritas. I don't know. What would you guys do with $10,000 if you had $10,000? Just tomorrow. I'm guessing most of you guys would reinvest it, but would anyone just like take a vacation? Maybe go out to some nice dinner? All right, see a lot of ideas here. Take the day off, okay? Reinvest. Yes, that's smart. Reinvest. Daycare, awesome. Yeah, a lot of people would reinvest. That is what I thought would happen. Smart people reinvest their money. They reinvest their money. That's cool. So essentially here, when I sold the put credit spreads, they made $12,000, and I put up $30,000. But in fact, because I collected 12, I really only put up $18,000. Now 12 divided by 18, 6 over 9, it's about 67% return. I think it said 63 in my slides. It said 63. All right, I was close. So you can make 60 to 70% on put credit spreads. Now I opened up these Tesla put credit spreads around July. It was around July, which is about 6 months ago. So if you're able to duplicate that, and we'll talk about how duplicating is possible. We'll talk about returns. For example, oftentimes I'll aim for about 100% return per year, but obviously I have some losses. I'm not perfect. So accounting for my losses, I'll end up having about 60 to 70%, maybe less, maybe 50%, still really, really high full-time income potential. I mean, even a $100,000 portfolio, 50%, $50,000, $4,000 a month. $4,000 a month, I mean, you can live in Colombia, you can live in many parts of the world, even most of the US you can live. I mean, that's above average income. $4,000 a month is pretty much above average nearly everywhere except for maybe Luxembourg and Dubai. You're going to do really, really well. So put credit spreads are something that you have to have in your portfolio for 2022 to make a full-time income. So, further on, we'll discuss more of that. I'm going to show you some things I'm doing on Nvidia and Nets. So yeah, make sure you keep sticking around. But I do want to talk about my future plan. So, how am I going to achieve the results that I'm showing you guys? I've already mentioned selling puts. We've mentioned covered calls, but also there's call credit spreads. Call credit spreads are fantastic because they hedge your portfolio. Okay, the call credit spread is very similar to the put credit spread. Okay, with the put credit spread, you hope that the market kind of doesn't crash and go below your strike for your put credit spread. A call credit spread is similar, except you're betting that the stock that you're investing in isn't going to have a tremendous rise. I'm going to show you how I did this on Nets. I killed it on Nets. I killed it on Snow, Nets, Nvidia, and Rivian. Rivian was a complete slam dunk. Hopefully I don't upset some people. I know some people might hold Rivian, but they have good backing, but they don't have any revenue. So I was very confident that the Rivian trade that I made was going to play out, and it did. It did. So I'm going to show you guys those trades again. I'm going to open up the portfolio again and go through some of those trades. But really, the future plan for 2022, put credit spreads. I'm going to have that exact breakdown for you guys shortly. Put credit spreads, call credit spreads. Don't forget high implied volatility. Okay, guys, write that down somewhere. Write it down. Yeah, if you have like a whiteboard, write down high implied volatility. Write it down in your forehead. You need high IV. If your wife or your spouse says, "What's that, honey?" Say, "I'm going to be rich soon, honey. I'm going to be stupid rich soon." All right. If you get in trouble, don't blame me. But yeah, post it on Instagram. It'll be hilarious. But high IV, okay? You need to have high IV, right? Tech stocks. I love tech stocks because typically they have higher IV and also they have high growth. Something that I'm going to be doing in 2022 is continuing to invest in Tesla. It's really not a secret. It's really not a secret. I'm looking at Tesla because it has high IV. It's an uptrend stock. I believe in Elon Musk. And the options are just beautiful. There's just so much beauty in the options. Whether it's put credit spreads or call credit spreads are way more risky on Tesla, okay? Be very careful with call credit spreads. Again, we're going to discuss exact asset allocation, pretty soon. But be very careful with call credit spreads on tech stocks. You usually want to go put credit spreads unless we're going to talk about, I'm looking at Yahoo Finance. We're going to talk about technical analysis. Okay. I'm going to teach you guys more about Bollinger Bands. Um, Once you see a stock really break through like this, like it's going down a lot, then fine. You can use certain strategies. They're safer. Okay. You can actually buy bull put spreads. If you see a momentum going like this, it's just falling like crazy. This is when you can take action. I mean, complete breakdown. So just for example, this purple line, guys, is moving average. A moving average just tells you where the stock has been historically. All right. So for net, by the way, the net position that I opened up, it's later in my presentation. So we'll come back here. This is just technical analysis that's really, really important. But you want to use technical analysis. You also want to look at earnings. Okay, earnings are super important. You can play earnings. We're going to go over a Lululemon example that I did. I'm going to show you guys a Lululemon example for earnings and momentum. Okay. So, but that's the general plan. And now we're going to get deeper into the plan. All right. That's the general plan. All right. Diversification. All right. That's also going to be in the plan. You don't want to go too much into one specific position. All right. You can get a very high ROI off put credit spreads, call credit spreads, iron condors. I'm going to show you that asset allocation. But I'll tell you right now, if you have a small portfolio, they're fine. You can go even up to 50%, as you'll see. But you don't want to overdo it, okay? You want to have a diversified option portfolio because options already have so much returns. Let's go to the next slide. They already have so much returns and cash flow that you don't need to go too heavy in one position. Although sometimes I break rules. Sometimes I look at Tesla and I just break all the rules because when you see opportunity, you can take it, all right? But you still want portfolio safety, which is where I get into one of the other strategies that I'm going to be using in 2022, especially for the portfolios out there that are above $10,000. You can start incorporating the wheel strategy. Okay. I'm going to take a quick water break. So wheel strategy, okay, is one of the most important things you can do. It's very consistent. It's like a consistent cash flow machine. Okay, it's an automated strategy. It gets you paid all the time, every single week. I run a lot of weekly strategies. By the way, you guys can run weekly strategies, monthly strategies, or quarterly strategies. If you have a job and you have a consistent income, maybe you don't need the weekly income. Maybe you want to go for monthly. I have a lot of students asking me that, should I go for weekly or monthly? Well, let me ask you guys. If you collect 1% a week or 4% a month, pretty much the same thing, right? Do you guys prefer weekly or monthly? Just curious. Who prefers weekly and who prefers like monthly? I see weeklies. So weekly, got it. Lots of weeklies, some monthlies. I also like weeklies. I like them a lot. They take more time. I'm tempted by weeklies. I like that. Yes. In fact, let's skip forward. All right. So we're going to talk about why weeklies are better later on. Yeah, later on. So weeklies, the reason why they're better, you'll see it later, is because theta really kicks in for weeklies. Weeklies are fantastic. And it also feels nice because every single week you get to see your results. You get paid. You literally get paid. You're like, hey, I made 1,000 this week. And then on Monday, you get to do it all over again. So it's really nice. But also for me, I am starting to move over to monthlies because I don't have as much time to do weeklies. But for the people that have time, if you're one of those and people, if you're one of the people that are becoming an and person, you're like, I have a job and I want to make option income, or I have a business and I'm starting with options. I'm going to make it a full-time income in 2022. Then, you're obviously putting in some more time and dedication, which, by the way, amazing. That's amazing. You're taking the steps that are necessary for financial freedom. So go for weeklies. But for me, I've been doing it for a long time, so I'm leaning more towards monthlies. But both are fantastic. Even quarterlies are fantastic. I'll show you a Tesla trade that I'm looking at that's more of a quarterly. But you want to incorporate the wheel strategy in 2022 because it allows you to buy stocks cheaper. Okay, when you're running the wheel strategy, you're selling puts to get in, which is what I'm doing with Tesla right now, and then you're selling calls to get out. It's automatic. There's no guesswork. You don't have to watch a hype YouTuber hyping you up on something and, hey, is he right? Is he not? Do I trust that guy? You don't need to do any of that. You have a strategy. Sell puts to get in, sell calls to get out. Automatic on replay, right? And by the way, you don't need a lot of money. So with Palantir, you can run this strategy for less than $2,000. American Airlines, less than $2,000. HIMS, less than $700. There's other stocks, plenty of them out there. Again, I wouldn't go below $5, but again, $1,000 portfolio, you can run some of these strategies. And if you have a portfolio that's 10,000, well, fantastic. You can run Palantir and American Airlines. Obviously, we'll talk about how much you should put in the wheel. I have all of that towards them, all of that. And again, so something I do want to talk about is buying spreads. I don't love buying options. I prefer to go for 50, 60% returns a year because you don't need to go for broke to get rich. You'll need to get rich once. And I prefer to get rich for sure than get rich fast, maybe. I don't want to get rich fast, maybe. I want to get rich for sure, and I'm ready to take a little bit more time. However, buying spreads is fantastic, okay? Buying spreads is really good because you can 2x, 3x, or 4x your money. In fact, I can show you what that looks like. So we'll take a look at some type of growth stock. Trying to think, anyone have any growth stock ideas? Put some growth stock ideas in the chat. I mean, I know a lot, but Nvidia, AMD, Apple, Corsair, SoFi, Costco, AMD. I got AMD twice, so I'm going to do AMD because I got AMD twice. AMD twice. All right, so we're going to take a look at AMD. AMD's awesome stock. I love what they're doing. They don't have as much market share as Nvidia. Obviously, Nvidia has, I think, 87% of the market. AMD has like 12. But obviously, AMD, huge growth stock. It peaked at about $161, okay? I'll show you guys how to 2-3x your money. It's not that hard. 2-3x your money. Obviously, don't put all your money into a trade like this. I'm not recommending this trade. I'm just showing you an example of what you could do on an AMD, all right? Especially if AMD, in fact, let me take a look at AMD. I'll just come back to next. I had this example pulled up for later, but I'll pull up AMD. I do want to look at AMD's chart. I'm going to show you guys some more things that I look at that are important to look at with technical analysis. So going into the AMD chart, let this baby load. All right, so first thing I look at is RSI. Make sure that it's not super high, because if it's super high, stock is already too hot. It already had a heat up. It's not going to get too much hotter. It's unlikely, okay? Just really unlikely. 43 is good. We're sitting right in the middle. All right. Now the Bollinger Band, I love Bollinger Bands, guys. You have to include this in your trading strategy for 2022 because it tells you where to trade options. When we go over the exact asset allocation you have to have for options, the Bollinger Bands tell you where to sell. If you're opening up an iron condor, you can open up basically around 125 for the puts, 160 for the calls. Easy. The Bollinger Band tells you the answer. Literally does it for you. So if AMD is right in the middle of the Bollinger Band, I mean, I can honestly see the stock going past like 150 easily. So let's go back into Robinhood. I'll show you how to basically 2-3x your money. Again, this is a buying strategy. I'm not in love with buying strategies, but this is something that you want to incorporate because if you can 2-3x just a small amount of your portfolio, like 10% of your portfolio, well, 10%, 3x, that's a 30% return, right? 30% return for your overall portfolio. So here's what this would look like, okay? If you believe that AMD will go up to 150, all right? This is what you can do. You can, or even 160, right? You can easily go up to 160, but let's just say, 150. All right, I'm going to do an example. I haven't practiced this, so I'm going to guess it's going to be around 2-3x. So I'm going to open up let's go 140, right out of the money, just right there, 140. So you can buy a 140, then you can sell a 150. This 150 that you're selling, it compensates what you're buying for 140. Rather than having to pay the total cost of $1,095, right? Not everyone wants to just blow a grand on AMD calls. Instead of buying call options, finance your call options, guys. Take out some financing for free, no interest. You can sell a call option for 150. Now, this actually works out perfectly. Looking at the total cost, it works out perfectly because total cost is 347. Does anyone know what the total return here is? What is the total return on this bull call spread? Again, buying the 140, selling the 150. Total amount I can make, I'm gonna look into the chat. $1,000. Yep, correct. $1,000. You can make a total of $1,000. All you have to put up is 347. Now, if we scroll down here, you're putting up about 347 to make $1,000. So your max profit is $652. Or in other words, $347 into 1,000 is almost 3x. It's just almost 3x because 333 times 3 is 1,000. So we're almost 3x, just slightly under. But I said 2 to 3x, right? So about 2.8 2.8 times your money. So this is something that you have to include in your 2022 strategy. Bull call spreads. Now, tech stocks will give you the best bang for your buck. Straight up, being honest with you guys. Tech stocks will give you the best bang for your buck because they have high momentum. Okay? Even, some people are afraid of a crash. Nobody can predict that. Nobody knows. But even if a crash were to happen or a correction, some of these big tech stocks like Apple, Amazon, Netflix, Google, Tesla, they're basically blue chips. So they're consistently growing. And when there's like a sell-off, you can actually predict the sell-off by looking at mid-cap stocks and small-cap stocks. Large tech stocks are less affected. They're affected later. So I would go tech stocks all day for tech stocks. So this is a strategy that you definitely want to incorporate. So 2x, 3x, huge premiums. There's huge premiums there. They're a bit expensive. However, if you really see that stock moving up, it will pay for itself. It'll just pay for itself. For example, 347, even if you lose it once, this strategy only has to work 1 out of 3 times to break even, okay? All right, so that's how you can beat your own goals, okay? If you set out a goal to make a full-time income, if you set out a goal to make, 10%, and you're like, hey, puts are not just doing it for me. Put credit spreads, call credit spreads, bull call spreads, all right? But again, we're gonna go over the exact breakdown shortly. All right, earnings wins. This is super important, all right? Because something that almost nobody talks about on YouTube, and the reason they don't talk about it is because they don't have institutional experience. They haven't worked at any hedge fund. They haven't worked in the finance industry. Most influencers are influencers. They do that as their primary income. I had experience working for PNC Capital Advisors. That's it's a small hedge fund owned by PNC. They had about $7 billion when I was there. I learned a lot about earnings, about predicting earnings, okay? So can you count your chickens before they hatch? I don't know. What do you guys think? Can you count your chickens before they hatch? No, never. That's right. You can't really count your chickens before they hatch. It's not possible, right? However, if you mix in different strategies, diversify, and incorporate earnings, which most people do not do, most people just don't do that, then you can have more consistent returns. Again, no guarantee. You can't count your chickens before they hatch. But what I'm trying to do today, and what I'm trying to educate you guys on, is putting the odds in your favor. Okay, we'll talk about that later. How most people are just in that casino mentality. All right, we're going to talk about that later. But let's pull up Lululemon. Okay, let's pull up Lululemon. I want to show you guys what I did with Lulu and how you guys can duplicate that. It's not that hard, but at the same time, it is a little bit risky. I'm going to have to warn you guys there, but I'm going to give you some best practices. All right, so we're going to look at my Lululemon history. This is a trade that I made September 9th. How do I expand this? I guess I don't really need to expand it because it's, I can't expand it because this is the only trade I've ever made. Okay. September 7th, I opened up a 392.5 call option on Lulu for $960. 2 days later, I sold it for $3,600. Now, I made a YouTube video about this, how I did this. But essentially, the quick breakdown is Lululemon had a number of earnings beats, okay? When you see a stock has consistent earnings beats, and obviously there's a whole lot more to it than just that, right? You have to research, you have to look at analyst revisions. There's a lot of things that you can do, but using earnings is something that you guys have to do in 2022, because if you incorporate earnings on top of all the things that you're doing, right? Technical analysis, fundamental analysis, no one else is doing earnings. Sure, they're looking at earnings, they're mentioning earnings. Oh, earnings are going to be on January 22nd, right? Influencers, people will tell you this, but they're not looking at it properly. They don't know how to actually predict earnings, right? They're just looking at earnings, but they wait for earnings to already happen. They don't predict what's going to happen with that call option before earnings. So essentially, you can duplicate this by finding companies that you believe will beat earnings. And the biggest indicator is, have they beat earnings before? What's the market sentiment? And have analysts been changing their minds on that stock? Have they been revising their expectations, okay? So you don't want to do this a lot because buying call options can lose you money. However, you can do this on something like Lulu to make consistent cash flow. All right, so I do want to talk about the Shiller PE ratio as well. This is very important for you to think about. Shiller PE is adjusted PE, okay? Bob Shiller, he's a Yale economist. And the stock market is pretty high right now, which is why later on I'm going to recommend you guys to sell call credit spreads. I'm going to show you where to sell call credit spreads, what stocks. For example, I'm going to show you an example on Nets and Snow and Rivian and Nvidia. Okay, maybe I said Nvidia. Shiller PE is high, guys. I want you to be careful. I want you to be very careful right now because I'm sure there's a lot of inflation. Banks are printing money. More likely the Fed is, Fed and the government is printing money. Fed wants to raise interest rates. Very, very shaky environment, guys. Very, very shaky. So don't go out there and, again, when I go into asset allocation, don't go out there and sell full put credit spreads. Okay, don't do that. It's not wise. You want to be hedged, and to be hedged, you want to have put credit spreads, call credit spreads. You want to sell puts. You want to run the wheel. I'll show you a lot more about that soon. But be very careful. The Shiller PE is higher than it's ever been before, ever, aside from the dot-com bubble. The dot-com bubble, obviously, you guys know this. I mean, even if you're young, I mean, dot-com bubble was really tough in the stock market. Currently, we're sitting at 39.5. Not that far from dot-com bubble. So be very mindful, okay? Again, the Shiller PE is very high. It was only higher than the dot-com bubble. And again, I think you should be careful. So this slide, basically, I already covered all of that. All right, now let's go into technical analysis. I want to go over technical analysis for a couple of growth stocks. So you can basically, you guys have a cheat sheet. You guys can basically, take a look at what I'm doing, copy the idea, do it for yourself, okay? We're going to look at RSI, Bollinger Bands, and basically where we're headed with a couple different stocks. Let's go in here and let's do Nvidia. All right, so Nvidia has been something that I've been trading a whole lot of. I'm going to show you 3 different Nvidia positions that I have. All right, I have put credit spreads and call credit spreads. I made a fortune on, not a fortune, but it's a small fortune on Nvidia. Made a couple $1,000s there on Nvidia. So I'm going to open up the chart right now. I'm going to show you what do you want to look out for when you're looking at the Bollinger Bands, okay? So specifically, I started selling call credit spreads right around here at $333, okay? If I go into my Nvidia position, right, I'm going to pull up Nvidia. And I know I also went over this. I also have another example for you guys on Nvidia, but I've been doing really good on Nvidia. And this is mostly call credit spreads, but also put credit spreads. And again, the reason why Bollinger Bands are so important, they literally predicted Nvidia for me. At $333 per share, Nvidia had a market cap of roughly $750 billion. But also, take a look. It was sky high right around here. You can see the RSI was over 80, guys. Over 80, heating up, too hot. Just, it's on fire, which is not a good thing. It's not a good thing. It is a good thing if you want to hop on that momentum, try to ride it out by buying calls or bull call spreads. You can try that. However, it's a bit more risky. What I prefer to do is sell options, consistent income. That's how you make income, not necessarily by buying options, by selling them. All right, that's the secret. And right around here, when Nvidia was around $330, maybe $326, right in this area, I started selling call credit spreads, and that brought in so much premium. And I'm going to talk about my rules on how much money that you want to, bring in on a weekly basis, on a monthly basis. I have that in my presentation, but let's continue on. All right. I also want to review some other stocks that I've had other than Nvidia. Right. So I want to go over Rivian, Coin, Net, Snow, all these examples. So let's go back into my Robinhood portfolio. I'm going to actually open it back up, and we're going to look at the total positions that I have. So, all right, Coin we talked about. That's an iron condor. This Nvidia put credit spread I did when Nvidia started to pull back down right around $300. See, guys, it's not rocket science. When the stock is high, call credit spreads will make you money. Right here, Nvidia call credit spreads. This one made $2,300. It was pretty out of the money, by the way. $387. Very easy decision. When Nvidia was around $330 per share, it was like sky high RSI, way above moving average, and at the top of the Bollinger Band at $330. Was it difficult? What do you guys think? Is it difficult when a stock is already at a peak valuation, super expensive, $330? Can that stock really rise by $50 more, which is roughly 1/6, about 18% more? Stock's already sky high. How likely is it to go 18% more? Unlikely, right? Not guaranteed. Could. Things go crazy and parabolic. Unlikely unless you're a Tesla. Exactly, which is why we don't do call credit spreads. Whoever said that, genius. We don't do call credit spreads on Tesla, but everything else, call credit spreads, totally, 100%. All right, Nvidia, easy. This is easy $2,300. Basically copy this trade. You can basically do something similar. Now Nvidia has pulled back, so maybe you guys want to go for 350, 360. But call credit spreads, Nvidia, fantastic. Rivian, $850 on Rivian. Rivian is a $100 stock. I believe when it was 140. Again, actually, let's go over technical analysis. Let's go back into technical analysis, okay? This is really important. Technical analysis saves so much time. You guys are digging into research, doing fundamental analysis. Come on, guys. You know, do something else. Go cook. Go have fun. You know, go out on a date if you're single, or have some fun with your spouse. Hang out with your dog. Give it some pets. You know, you don't need to do fundamental analysis, guys. You don't need to waste all that time. I'm going to show you a shortcut. I'm going to show you an amazing shortcut. All right. So going into Rivian. All right. Oh gosh, it's an $87 stock right now. You know, Rivian was just way too expensive. When I saw this decline right here, okay, RSI was pretty high. It wasn't sky high, but it was pretty high. But you can see right here, there's a complete breakdown. It's pretty, actually, I'm on the 1 year, and Rivian is a fairly new stock. So let's go 3 months. Let's go 1 month. All right. As Rivian is breaking down, it's pretty obvious. They don't have a whole lot of cash flow, and I'm not bullish on the stock. It's a whole lot of hype. When I see a lot of hype YouTubers talking about it, I know that it's hype. So it was really easy at $118 to sell Rivian call credit spreads right here. 200, 210. That's a no-brainer, guys. No, your dog can do that. we can find a monkey to throw a dart. We can find a monkey to click buttons and do that. So it's not as hard as you think to make a full-time income. You do need some money, right? You can absolutely grow a small portfolio, 5K, 2-3 times, maybe even 4 or 5 times if the market's good and you use the right strategies. But if you have a decent sized portfolio, it becomes pretty easy to make a full-time income if you're picking the right stocks, the right strategies, and the right stocks. Okay. For call credit spreads, again, Nvidia, Rivian's easy. What else do we got? We got Net. We got Net and Snow. So I had a couple of positions expire on Net, made really good money. They expired, and I actually rolled that option out into February 18th. But Net and Snow, guys, is a gold mine. It's literally a gold mine. Let me show you Net. I will actually tell you guys, I'm not perfect. I made a mistake. I didn't lose money, but I lost opportunity on Net. I'm going to tell you guys that opportunity that you can still take. I'm less sure now. Market is a little bit crazy, it's shaky. I'm less sure about this opportunity now, but it's really, really good idea. Net is something that you should add to your watch list for options, 100%. When Net was peaking right around here, around high 200s, easy. I started selling call credit spreads. This is the same pattern. I saw the same pattern on Snow, Rivian, Nvidia. Net's the same thing. By the way, guys, tech stocks, look at price to sales ratio. On Net, the price to sales ratio was 100. 100. That's insane. If you make $100,000, you don't buy people, right? That's not legal or whatever. That's not possible. But let's say that an asset's earning $100,000. Let's say that asset, it's not growing super fast. It's growing. Maybe it's a real estate property. You rent $1,000 a month, right? So it makes $12,000 a year. Does it make sense to buy that property for 100 times for 1.2 million? It makes 12,000. You're buying it for 1.2 million. You're buying it for 1.2 million. It makes 12,000 damn dollars. It's dumb, right? Does that make any sense? If a property makes 12,000, it's good to buy that property for $120,000. That way, it's 10%, right? Net is literally trading for 100 times sales. Makes no sense. So it's very easy to sell call credit spreads right here. Super easy decision. All right. All right. So we talked about Nvidia. We talked about Rivian. We talked about Coin, Net. I skipped Snow, but Snow is the same story as Net. Super high valuation, good business, but price to sales was sky high. Stock was sky high. RSI, Bollinger Band, easy. And sold call credit spreads. Now the mistake I made, guys. What would I've done if I can go back? Any guesses? Any guesses what you can do right here? Something I haven't really talked about, but it's super easy. Super easy. Any guesses? All right, CCS. So I got CCS buy put. Yes, buy put. Yes, 100% buy put. I did CCS because I like income generating strategies. You have to make income, right? If you want to retire, if you don't want to work 9 to 5, if you're tired of your business is stressing you out, if you want to be location dependent, I travel a bunch. I don't absolutely love travel. I'm sick and tired of it, but some people want to travel. Some people want to be in different locations. If you want to do that, it's all about income, right? So call credit spreads is what I did. However, buying a put on a stock that's very expensive will obviously make more money. If you can buy a put option on an expensive tech stock, obviously you can 10x your money. This would have been a 10x gain. I'm positive. But the thing is with me, I want to go for consistent returns. I don't want to go for maybe returns. I want to be consistent. All right. So I'm going to review this, and we're almost there where I'm going to give you guys my master plan. I'm going to show you the whole allocation. So what's likely to work in 2022? So reviewing 2021, I actually think 2022 is going to be pretty similar, okay? Investing in high implied volatility stocks, we already said right on your forehead, high implied volatility, right? And what you want to aim for, and this is where I get into my rules. You want to aim for the 1% rule. 1% rule states you want to collect 1% premium a week. If you're selling puts, you have a larger portfolio, 1% a week. If you have a smaller portfolio, okay, you can mix in the more risky strategies, which I'm going to discuss shortly. It's called the 10% rule. I'm calling it the 10% rule. This is where if you open up an iron condor, you want to get at least 10%. Put credit spread, at least 10%. With iron condors, you can make 20, 30, 40, 50%, right? But 10% on small account trading strategies. We're going to discuss all of them soon, okay? Also, this means if you're properly combining these two strategies, you should be aiming for about 96% annualized returns. Again, that's what I aim for, but I'm not perfect. I'll have some losses. You know, I have some cushion. That'll take my 96% down to maybe 60, 70%, all right? It will take me down a little bit. However, you want to aim for something big, right? Because you never know, you might even make more than 96%. You know, it all depends on which strategy you're running in the market, but you want to aim high, guys. If you want to have a full-time income, aim high. It actually takes the equal amount of effort to aim low or aim high. You might as well aim high. It takes a lot of energy to do anything in life, right? So you might as well aim high. All right, so this is the Nvidia trade that I showed you guys. 3 different strategies: call credit spreads, put credit spreads. We discussed those. Those are my specific strikes that are expiring January 21st. You guys can do this going out into March. You guys can do this going out to February, okay? Something similar. You can honestly still do 260, 250 put credit spread just for February, for March. Plenty of premium on Nvidia. Great growth stock. Fantastic growth stock, okay? Same with call credit spreads. You might not get any premium for 380, but go for 350. It's a no-brainer, okay? And then, again, I'm showing you high implied volatility. 61 is really good. Fantastic. Apple, 41, it's okay. Medium. It's medium, okay? 41 is not bad. Coca-Cola was 16, trash, okay? Also, if you want to grow your portfolio, fast, you don't have much money, you want to put up less capital and make more money out of it, you need to use leaps. Leap options, poor man's covered call, they will allow you to collect a lot more premium, or with leaps, leverage your money. With the leap option, you don't have to buy 100 shares. You can buy an in-the-money option and have big upside without having to put up capital. Leaps are one of my very favorite strategies. I don't use them enough. I get upset at myself because I don't use them enough. Now, I don't really need to, because at this point, my portfolio is pretty scaled. I'm more trying to protect the portfolio. But when I was growing the portfolio, leaps were amazing, and they're still amazing. I am planning to incorporate leaps into the portfolio, and I plan to use leaps on tech stocks, okay? Different tech stocks, whether it might be Palantir, because Palantir is now under $17. So with Palantir, show you an example right now. This is fantastic for small portfolios, but everyone really. Palantir is $16.90. Buying 100 shares, $1,600. Most people can afford it. But here's what a leap option is going to look like, and here's what a poor man's covered call is going to look like. Poor man's covered call, fantastic strategy. You know, a leap option is technically 1 year out, okay? So January 2023 is something that you might want to buy. 15 strike. Rather than paying $1,700, you only have to pay $478. So this is a fraction of the cost. It's about 1/4, about 25 to 30% of what is required to buy 100 shares. This is what I'm going to be doing in 2022, okay? This is what I'm going to be incorporating into the portfolio. buying leap options, and then selling calls against this to make premium, okay? All right, so now that we talked about that, that's what a covered call looks like. I just wanted to mention covered calls are safer than stocks. Does anyone here think options are riskier than stocks? And by the way, should I continue here, or you guys already got enough value? Should we call it a day? You guys tell me. Should I continue? I don't know. Let's go. All right, I like that energy. I love it. Feel options are riskier. Okay, I knew people were going to say that. Options are actually not riskier. So when I was working on Wall Street, option trader told me options are safer than stocks. I'm like, what's that guy smoking? He's just an option trader. That's why he's telling me that. But actually, if you buy a $100 stock and you sell a covered call at 110, well, basically you're just holding the stock, but now you have an extra premium that you collected when you sell a covered call. So if you sell the 110 call and you collect $5, well, the stockholder can lose 100. You can only lose 95. So a covered call, you can only lose 95. So options can be safer than stocks. They're not all safer than stocks. Obviously, an iron condor is not safer than holding a stock. However, a covered call is safer, selling puts is safer, and the wheel strategy is safer. Okay? So options are safer. Now, for the people that said weekly, all of you guys said you want weekly expiration dates. Smart. You guys are on the right track. That's because option data kicks in like right around this period. When an option basically has a week, you're right here. You can collect so much income. You know, you're selling a week out option, it's going to decay all in 7 days. So you can make so much money. Whereas, you know, if you're buying leap options, that's why when you buy options, you want to go long term because the time decay is very little. It's a lot less. Okay. Now we already talked about earnings predictions with Lululemon. This is something that you have to do. All right. That's something that you have to incorporate in your strategy. All right. Now, my opinion on beating the market in 2022, making a full-time income. All right. It's all about hedging, hedging your portfolio. You guys know I have a lot of money in Tesla. However, I don't just hold money in Tesla. I would not do that. I'm selling call options. Okay. Let's take a look at my Tesla position. I'm selling call options. I have a 1250 call option. It's up $6,000. Okay. Easy money. Selling covered calls works. You're hedging your portfolio. Huge Tesla position, massive Tesla position. However, I'm selling covered calls because I'm afraid. What if Tesla pulls back a lot? It may, and this covered call isn't helping me, you know, hedge everything, but you want to add covered calls to hedge and make income, okay? All right, so hedging your portfolio will actually give you higher alpha. It'll help you outperform the market. You know, people can just hold stocks. You're not going to outperform the market that way. Selling covered calls, selling puts, and adding in the small portfolio strategies, which I have to get to. Because I know we've been on here for a little bit over an hour. I'm going to get into the bread and butter and give you guys the visual of what I did at Goldman Sachs, essentially. So let's go into asset allocation, okay? Asset allocation like Goldman Sachs. I'm going to pretend you guys are clients at Goldman Sachs, basically. Not actually, because I don't work there anymore. But I'm going to tell you the information, the way I thought about clients, the way I would look at clients and how I wouldn't personally advise them, but I've listened to the advisor advice. He didn't do anything special that I can't do. So let me tell you what that information is. All right. This is portfolio allocation. If you have $5,000, this is how more or less you should allocate your portfolio, okay? Most of your portfolio should be put credit spreads and call credit spreads. Spreads, both of them are credits, okay? Want to make sure it's a credit, because when it's a credit, you're collecting income. We all want to collect an income. You don't want to spend the income. You do not want to spend income. You want to collect it, okay? So put credit spreads, call credit spreads about 50%. Poor man's covered call, go 15%. Poor man's covered call allows you to control 100 shares with the leap option without having to put up all the capital. Leaps, you know, feel free 20%, but you can also, you know, leaps and poor man's covered calls are pretty similar. All right. If you're bullish on a stock, you don't have to do poor man's covered call. You can go for leap. And then 15% on iron condor. A $10,000 portfolio, pretty similar. Okay. You can reduce some of the spreads and add some other things like wheel strategy. All right. Cheap wheel strategy could be Palantir, could be, you know, HIMS. I'm kind of beating a dead horse with Palantir and HIMS, but that's because I like to abuse stocks. I like to exploit the same stocks and just squeeze money from them. It means it's easy. If you find the right stocks, you run the right strategies, you're golden. Why would you change a strategy that's working, right? If it's not broke, don't fix it. All right, guys. Can I get some yeses? Can I make sure you guys are alive in the chat? I want to make sure. If something's not broke, if you're making money, you continue doing that. You continue to make that bread, that guacamole. Yeah, of course. So I just use the same stocks, wheel strategy stocks. All right, that's a $10,000 portfolio. Now, a $20,000 portfolio, you have something to protect now. You have a little bit to protect. It doesn't take overnight to make $20,000. It takes a lot of time. It can take people 1 year to save $20,000 in US, right? I mean, it's not easy. You know, that's basically, putting $2,000 away a month, right? $1,500, $2,000, $1,800 roughly there, right? You have to put that money away. So now you have something to protect. So now you don't want to go iron condors. As you can see, I'm recommending going down on iron condors. You don't want to go 12 to 15% iron condors. You don't want to do all spreads either. You want to start reducing the risky strategies that are awesome, but now incorporate stock in the wheel. All right, $50,000 portfolio. Now I'm adding in a whole different ball game: selling puts and covered calls. Very similar to the wheel strategy. However, you can just sell puts to get into a stock, and if you're bullish on that stock, you don't have to sell covered calls. You don't have to do the wheel strategy. You can just sell puts to get in and hold. Buy and hold is still a thing, but use options in 2022 to collect income and get the price that you want, for a stock, okay? Poor man's covered call, put it lower, 5%, leaps lower, iron condors lower, but now you can also start putting in alternative advanced strategies. We'll talk a little bit about that as well. We'll talk a little bit about alternative advanced strategies in just a second. All right, now portfolio allocation for a $100,000 portfolio. This is where things really get good, because if you make 60% returns, $60,000, $5,000 a month, you live $5,000 a month anywhere. Pretty good, unless you're me and you just travel too much and you just blow all your money. But $5,000 a month. You have six-figure portfolio. You're getting into that territory where your stress levels should go a lot down financially. Not in total, but financially, your stress levels should go down because you have so many things that you can do. Wheel strategy should be your main focus at that point, right? Because you want automated strategy. You want to focus on keeping things simple in your portfolio, okay? So wheel strategy, leaps, and you still want to have some alternatives. Again, we're going to get into that. And I'm reducing put credit spreads a lot and iron condors a lot. They're risky. You want to have them in your portfolio, but iron condors could lose 100%. Put credit spreads and call credit spreads could also lose 100% what you put in. So when you have a bigger portfolio, start going for safer things, okay? Now, this is the last portfolio I want to show you because above 250,000, I mean, it becomes very, very customized. Things become very customized, okay? At a $250,000 portfolio, it really requires a person to become knowledgeable, good, and experienced. You don't want to just come in 250K if you don't know what you're doing, okay? Still the wheel though. Now I'm increasing alternative advanced strategies because when you're experienced, you can afford to take on more risk because you know how to manage your risk. You know risk management, okay? You know what to do if a position goes against you. You know what to do in almost all situations once you have experience, okay? So now this is a strategy that I want to show you guys. This is an alternative. This is an example of an alternative strategy. I'm not going to have enough time today, and we don't want to be here until like midnight East Coast. But this is an example of a strategy. You're actually getting paid here $3, and you have unlimited upside. You have literally unlimited upside here. This is an example of nets, by the way. You're collecting $3. This is an example of an alternative. This is actually called a Christmas tree. This is an alternative Christmas tree. There's many variations, but this is a strategy that I highly, highly recommend. All right, now you guys have an important decision here, and there's a couple of decisions here. There's actually two ways. There's two things that I want to discuss with you guys today. All right, there's two ways in 2022 to make option trading a full-time career. You can take everything I showed you and taught you today and do it yourself. Some people have done it, but for most, it's a lot of time, it's mistakes, and before they start making money, it's usually a really hard road. In fact, a lot of my investor students, they told me that they lost money before they started learning and really working with me, really understanding how I think about options. That's because most people have they have a casino mentality. They're going into option trading thinking, I'll buy call options and I'll hope I'll get a 10x gain. Well, that's possible. You can get a 10x gain, but you guys want to make a full-time income. Am I right? You guys want to make a full-time income, right? Let me get some yeses in the chat. If you want to make a full-time income, you need consistency, all right? You can't have that casino mentality. You need the right guidance. You need the right experience. You need to be safe. You need to be consistent, all right? So the other option that you have is have me help you. Not just help you, but I'll help you on a customized level. Now, before I tell you how exactly I can help, do it with you, guys, Happy New Year's. It's January 6th. I already said that, right? But I just want to ask you a simple question. If you set New Year's goals or resolutions for 2022, can you type them in the chat right now? I just want to look through some of them. Okay, I'm just curious. 250K, financial freedom, full-time trade. Yeah, full-time trader is a really good goal. Fire. I know fire. Stupid rich. 250K. Perfect. Perfect. Making income. 250K is a great goal. Saving, consistency. Awesome. Thank you for sharing that. I'm gonna continue read. I'm gonna actually read through all of this, but let's keep going. I see a good amount of yeses. All of you guys are either saying yes or you have big goals. I love it. Here's the thing. Did you guys know that according to Forbes, 80% of people who set New Year's resolutions, they fail to achieve them? And the biggest reason, according to Forbes, is because these people don't have an accountability structure to help them change. So when you choose the done with you option, not only will I teach you the skills, trading knowledge, and transfer my institutional experience to you, you will also be held accountable to ensure that you hit your 2022 goals. Whether it's quitting your job, many of you guys have said quitting your job, making a full-time income, trading options, or just living the life that you deserve. I'm going to be there for you. This is something that I love to do. This is something that I have a big passion for, right? Now, let me tell you how I can help you. There are 3 different ways that I can help you. All right. Remember when I said that most people are or people, they go to school or they flip properties. They're or people. The actual millionaires, people that are successful, people who have optimism, people who are doing the best in life, the winners. They're all and people because they focus on all possibilities. The 3 options that I'm going to share with you are all and options. You don't have to just pick one, okay? There's going to be different options for you guys, 3 different ones. You don't have to pick one. You can pick 3 if you like. You can pick 2 out of 3 if you like, or if one really stands out to you, you can just pick one. The first way to make a full-time income trading options, you can hire me to coach you one-on-one for a full year. This is a lot of dedication for my part. You will get my direct phone number to message me. That's my private phone number. You're going to have full access for all of 2022, all right? You will also get weekly calls with me where I will look at your portfolio and guide you on trades. Basically, you can think of me as your personal trading coach, opening and closing trades, giving you buy and sell signals, right? Exactly what I'm looking at, like Nvidia, Rivian, Snow, all the stocks that I'm looking at. When I see opportunity, basically I'm your financial analyst. I'm going to be looking at opportunities, exactly when to get in, when to get out. Anything that you need to make option trading your full-time income in 2022. I'm going to be there to support you, all done with you. Now for this, as you can imagine, I can only take on, for this first option, 3 clients, okay? For this first option, it's just 3, all right? This is the most limited option. This is a $120,000 investment for 1 year. It's 4 easy quarterly payments of $30K. If you're like most people, you like saving money. We all like saving money. So if you want, you can save $20,000 with a one-time payment of $100,000. All right. Now, I realize this is not for everyone. Not everyone can afford something like this. Okay? Understand. All right. Let me tell you the second way that I can help you. The second way that I can help you. This is through the 90-day Option Investor Bootcamp, also known as OIB, OIB, that's the acronym. It's actually starting in less than 2 weeks. I ran this last year with a few different investors. All right, I had a couple of different people that have had crazy results, tremendous results. I'm really proud of the group that I had. It was a small, very small group, but I've learned so much on how to coach them, and I know how to get them results. And I want to duplicate this year again. When my team drops the link in the chat, or when I show you the link, you can go through all the successful case studies for yourself. I put them all together. I've asked the students to share their results, so you guys can take a look at them. Right? My team will share that momentarily. But I want to tell you more. During these 90 days, I'm going to walk through with you personally the skills, the process, systems, and all trading knowledge, and most importantly, my institutional experience to make a full-time income in 2022. So here's how the Option Investor Bootcamp works, okay? You'll get 10 weekly sessions with me in a very small group, an intimate group of 10 investors only, just 10. That's all we can do. I will run this for 10 weeks straight. After that, you will get a 90-minute one-on-one session with me. You might ask, why after? Because I want you to I want you to ask basically everything that you can think of. Ask all of your questions during the 10 weeks. So when we can reserve this 90 minutes of one-on-one time, we make sure it's 100% personalized to what you need, okay? Also, in our 90 minutes, I'm going to create you a whole custom future financial plan, just like what I was doing at Goldman Sachs. Everything that I was looking at with investor portfolios, all my experience, I'm going to apply it to you. I'm going to give you a custom future financial plan. I'm going to calculate where you're going to be financially. 1 year, 3 year, 5 years. We're going to calculate when you can fire, when you can tell your boss to F off. Boss, I don't want you no more. I'm done. I'm good. Options has retired me, boss. I'm done. Here's my last day. We're going to talk about ROI. We're going to talk about risk management. This is very custom to each person. It depends on age. It depends on income. It depends on your portfolio. Very custom and tailored to you. All of this has a value of $40,000. But that's not all. For fast action takers, I'm going to do 3 things for you, okay? There's going to be a lot of things that I'm going to give for you guys, all right? Bonus number 1. You will get access to my personal options trading cheat sheet. This cannot be bought online or anywhere else in any of my programs. This is worth $2,000 alone. Now, why 2,000? I actually created this when I flew to Philadelphia, specifically to dig up old hedge fund reports. I used to store all these hedge fund reports. I don't know if I was allowed to do that or not. And also for my time at Goldman Sachs and other hedge funds. Again, I said I used to work for PNC Capital Advisors. I was actually also a financial analyst, and I was part of a quantitative fund. I was able to look at which stocks were likely to move higher, which were likely to move lower. We were doing earnings predictions. I put all that together. I literally flew to Philadelphia. It was a pain in the butt, but I put all this together, and I want to share it with this group because this is something that has really changed the way I use options. This has changed the way I trade. This is how I found opportunities like Nets, Snow, Rivian, Tesla, because a lot of knowledge that I got from hedge funds is how to pick momentum plays. Finance textbooks will say there's no opportunity in the market. Market's efficient, but that's not what reality is. In theory, the theory says something, right? But in reality, I found so many anomalies, so many ways to make money. So I created a cheat sheet that I want to share, okay? That's bonus number 1. All right. So now let's talk about bonus number 2. All right. So bonus number 1, cheat sheet. You'll get a private Telegram group. This will allow you to have direct access to me for 90 days, right? So for 90 days, we're going to be in contact. I'm going to be on you for accountability because I said before, the reason why most people fail, either they lack knowledge or they don't have accountability. If you don't know what Telegram is, by the way, it's just a messaging app. Think of it as just a way that we can communicate. Now, this is not one-on-one. You know I charge way more for that. However, you'll be with me and just 9 other option investors. All right. Bonus 3. Last but not least, the third bonus, the most exciting one. If you take action today, I'm also going to give you a special early bird price. Now, before I reveal it to you, the Option Investor Bootcamp is valued at least 68K with all the bonuses combined. The early bird price is only 13.5K. This is 3 monthly payments of $4,500. Now, if you want to make a one-time payment, I'll give you $3,500 off, and it'll only be $10,000. I will show you the link to get started in a few slides, and my team will also be dropping the link in the chat very shortly. Now, just a quick question. If your 10K investment was going to be able to help you make at least 2 to 5 times your income this year, or if it could triple or quadruple your portfolio size, at a minimum, get you the opportunity to do 60 to 80%, what would that be worth to you? I want to take a look at the chat. What would that be worth to you? By attending this bootcamp once, you're going to have the skills and the knowledge to make money for a lifetime. All right, I'm excited. I'm super excited because this has been my passion for a long time. Does that sound good to you guys? Can I get some people typing in option freedom in the chat right now? Let's see some option freedom. Lastly, I also recognize that even at this option, the second way, it might still be a bit much for everyone. Some people might not want to invest that much time or money. So we have a final way, which is also a very good way. It's our Option Income Academy coaching program. Now, if you already have this, obviously, this isn't for you. You already have it. You're already part of the community. But if you don't, it's a private Discord community where you can watch me make trades. It's a full masterclass on option trading, 8 modules, 8 hours of content to train even a beginner how to make a consistent weekly income trading options. This is where I'm running different strategies like the wheel, Tesla options, squeezing money out of Nvidia, call credit spreads, and more. There's also multiple options coaches in the Discord. You know, they pretty much handpick different plays and they're trained by me. They also pick a lot of winning trades. And I love the option coaches, right? This program is different from the Option Investor Bootcamp, as I have specific curriculum for the OIB investors. For the Option Investor Bootcamp, I have a specific curriculum that is 10 weeks long. And you know, I'll personally make sure that you have a custom tailored strategy. I'm going to go over all the stuff that I mentioned, right? By the way, each option I've showed you today, the 3 options, you already know which one is best for you, right? You guys know which one's best. We will have time and ability to openly look into your portfolio, given a very small group in the Option Investor Bootcamp. Okay, that's the main benefit. We're gonna have so much more intimacy and time to connect. The Option Income Coaching Academy has hundreds of students. It has hundreds of investors. It's not as intimate. It's still great, but not going to be the same level of connection I can have with you in the Option Investor Bootcamp. Okay. Option 3 is a Discord community, right? That's option 3. Now I've shown you the 3 ways that I can help you today. Now, team, can you please drop the link for fast action takers in the chat? People want, you know, financial freedom, fast action takers. I'm super excited. I've been doing this for nine years now. So I have so much confidence in the group that I had my last training with. I just can't wait to start this in less than 2 weeks. And by the way, when you open up the page from the link, you're going to see an option to book a call with me. All right. For any people that still have questions, there's a $500 non-refundable deposit to reserve a 30-minute session of time for any questions or concerns that you may have about the programs. If you choose to move forward with any of the options, with the Option Investor Bootcamp, or any of the other 3 done with you ways that I talked about today, I'll be more than happy to apply your $500 as a credit to any of the programs, okay? To any of the programs, it will be applied. But I can only speak to 10 investors over the next few days. So please reserve, you know, pick a spot, reserve your spot now so you don't miss out. This is limited. And by the way, did you know that during the New Year's, like right now, this is the period where the most money is spent. I don't know about you, but I know that me personally, I'm really excited. I'm going to spend a lot of money to get a head start on this year. For me, it's all about personal development. I've been option trading for a long time. I've already mastered that game. I want to do more personal development. I want to invest in my business. I want to invest in my students. I want to see more student success because I believe sharing and giving back, that's what I'm going to be grateful for. That's what I get, that's what I feel passionate about. That's where I get some of my energy. All right. Personal development, investing in my business. But for you and many others, whether it's personal development program, a shiny car, a vacation plan for the year, or like the latest gadget, I hope you're not buying the latest iPhone. You should be really investing in your own education than the latest iPhone. Or like tools, I don't know, some people are handyman or whatever. We're all going to spend our money anyways to enjoy and succeed in 2022. If you're going to spend or invest your money this year, why not just do it with me? Let's do this together. I want to show you guys how to be successful in 2022 and make a full-time income. Now, to make sure that you get the most out of 2022, this is my plan. This is what I want to do for you. So don't let your money go somewhere where it's not going to be fruitful and useful. Don't buy things. Invest in yourself. Invest in your education. Invest in your future. Because I want you to all have a similar life. My life is not perfect. I travel, have a girlfriend. I can afford anything I want. My life's not perfect, but having this full-time income certainly solves my money problems. I have plenty of problems that are not money related, but at least I solve my money problems. And that's what I want because having more money allows you to have less stress and really invest in other activities that are non-work related. All right, so the ball is in your court now. If you want to make a full-time income trading options in 2022 and choose to do it yourself, then I wish you the best of luck for 2022. But if you choose any of these programs, like the Done With You option, the Option Investor Bootcamp with me, well, I'm excited because then I'm going to help you get stupid rich. I can't wait for you to join. I can't wait to spend some time with you guys and work more closely. That's something that I've been dreaming of doing, but it's been really hard. It's been really hard with the Discord community. There's a lot of students there. There's hundreds. So that's why there's this group, just 10 people. Super excited. Can't wait for it. So hopefully my team has shared some of the testimonials, some of the links. So I'm super excited. Thank you guys for joining this. I can't wait to see you guys soon. See all you guys soon.